The big news is that China's currency has devalued recently, leading to talk of a trade war, as the United States labels China a currency manipulator. I touched on this in my previous video when I talked about how European bond rates were falling even further into negative territory following the bad trade or policy news in terms of international relations. So anyway, before I get into the article I'm going to read, I want to look at how China's currency is actually doing. And when I looked at this, I was like, what? This is what the big deal is? In the past week, China's currency has devalued by like 7%? Because 10 is like 7% of 15. 1 is 7% of 15. So like over the past several days, China's currency has devalued like 7%. And yeah, depending on what context you're coming from, that could seem either large or small. I mean, it's really a typical currency move over like the course of a year. It doesn't always happen, but it happens often enough so that when things like this do happen, they're not surprising. So anyway, everyone's like making this big deal over this big Chinese currency move, and they like only devalued by 7%. And let's look at over 5 years ago. As recently as like early 2017, their currency was in the exact same value. So they're devalued, but they're only back to where they were in like 2016, 2017. The media is making this out like a much bigger deal than it really is, in light of knowing these facts. I guess they're just sensationalizing everything for clicks, rather than talking about real substance. I mean, to be fair, they sort of have to do that to catch eyeballs and be successful, so I mean, I guess I'm not that outraged. Again, the yuan has recently devalued to about like 14 per dollar, but looking at this graph again, as recently as like late 2018, well, maybe this is just bad because it's losing resolution because it's zoomed out. Let me zoom in back a little bit. No. Like back in late 2018, they were also at like 14. Granted, it was like 14.4 instead of 14.2, but they were almost as low within the last year, so what's the big deal? And again, in late 2016 or early 2017, they were also this low. So with like the same pre-Trump low tariffs, China's currency was this low in like 2017, 2016, and everything was perfectly fine. So I don't get why the media is making such a big deal out of this. So anyway, that's enough ranting on my part. You get the currency picture. Now let's see what the news articles actually have to say about this. So this article is from CNBC, and it's Trade War Turns into Nasty Currency War as US calls China a currency manipulator for first time since the 90s. Yeah, because previous presidents wouldn't call China a currency manipulator, and the big change now in this article is that Trump has. Last used in the 1990s, the designation was announced by the U.S. Treasury Monday after U.S. markets closed out a turbulent session. The Treasury's move came less than 24 hours after China's currency fell below the psychological red line of 7 to the dollar for the first time since 2008 on Monday. I mean, okay, maybe it's below 7 to the dollar for the first time since 2008, but they've been really close to that point as recently in like 2017. So if they're like 2% lower than they were in 2017, what's the big deal? I mean, if they were to fall further to like maybe 12 per dollar, then okay, that would be a 20% devaluation, and that would be a big deal. But they haven't yet, so I don't see what the big fuss is about just yet. Other than like sensationalizing this and making a mountain of a molehill in order to get clicks. I don't get why it's such a big deal when we're like only 2% lower than we were 2 years ago. This is just nasty. We designated them not a manipulator recently. Now it's just out of spite, said Peter Bolkver, chair of investment strategy at Barclay Advisory Group. The move plays up the risk the U.S. considers intervening in the currency markets to weaken the dollar. The Trump administration took the trade war up another notch, calling China a currency manipulator and ratcheting up expectations that the White House has other moves it could make to retaliate against China. Last used in the 90s, the designation was announced by the U.S. Treasury Monday After U.S. markets closed out a turbulent session, the Dow down 767 points on Monday. Again, they're overreacting. The currency is just 2%. They already knew we had these trade tensions and everything. So the fact that the currency devalues a little bit and then Trump retaliates a little bit. So, I mean, it's just a huge overreaction. It's something they should already have priced in. The offshore yuan fell to a new low of 7.13 per dollar. It's clear now that the trade war has to become integrated with currency war, said Mark Chandler, chief market strategist at Bunkenberg Global Forex. Chandler noted that the U.S. has a 6-month period of review for China. It gave China a pass on May. Now, I mean, I get it a little bit because, well, it's not just that the yuan has fallen 2% below its 2016 lows. It's the fact that we're responding by labeling China a currency manipulator, enabling the prospect of further escalation. But I mean, the market should have known that Trump's a hardliner and that there were prospects of this getting worse, and that this has been in the cards, been taking a tougher line on China, and there wasn't an absolute 100% guarantee that China would instantly agree to our demands, or that we could immediately come to some sort of mutually accommodative compromise our first go. So, I mean, it should have been already priced in that things could get a little rough. In its release, the Treasury cited an original law from 1988 and currency manipulation. But that law was altered in 2015 and 18, and the charges were not mentioned. In May, the Treasury said in a report that China did not meet standards identified in the Act, but it said it would carefully monitor and review this determination over the following 6-month period in light of the trade balance between China and the United States. They sidestepped it by having it come out between reports and ignoring the size of the trade balance between the U.S., the overall current account position, said Chandler. The move came less than 24 hours after China's currency fell below the psychological red line of 7 to the dollar for the first time since 2008 on Monday. That triggered a major sell-off in risk assets globally, as investors speculated the US and China were far apart in any trade deal, and the world is more at risk of recession. This plays up the risk of intervening, and that's why you see the dollar weakening, said Chandler. The White House had discussed intervening in the currency market last month to weaken the dollar, but had ruled it out at the time, source told CNBC. Strategists said it appeared China was not intentionally driving down its currency, but was no longer propping it up. I mean, it's their currency. Why should they have to spend their currency reserves to prop up their own currency? As it had been, and the way it trades in the next few sessions will be key. The People's Bank of China each day sets a rate for the yuan, allowing it to trade in a band against the dollar that is 2% on either side of its midpoint value. That is the onshore currency, or the CNY. The offshore currency, or the CNH, is used by foreign investors and banks, and it fell to a record 7.09 per dollar on Monday. Trump is trying to get his cake and eat it too. This kind of puts a political stamp on China, that they are manipulating the currency, but by them lowering the value of the currency or not supporting it, China is eating most of these tariffs so the US doesn't have to. He's got conflicting demands here and playing it all to his benefit. The Treasury, in a statement, said Treasury Secretary Mnuchin would engage with the IMF on China's currency manipulation, but the fund just recently said China was not unfairly influencing the yuan. It won't pass the test with the International Monetary Fund, said Fred Bergstein, senior fellow and director at the Peterson Institute for International Economics. He said this move was unexpected and unjustified. Chandler said the yuan was down 2.5% year-to-date as of Monday, when it lost 1.5%. I mean, see, it's only down like 2.5%. I mean, currencies can move like up to 10-20% over a year, so it's not really that big of a deal so far. China has been using its reserves to prevent weakening of its currency, but now it's not. So the US wants to say now it's manipulating as opposed to what it was doing last week, or 3 weeks ago, by preventing a bigger sell-off, said Chandler. One aspect of the designation gives US corporations the ability to sue China, claiming harm from its currency policy, Chandler said. The manipulation designation is likely to have bipartisan support, since earlier Monday, Senate Minority Leader Chuck Schumer criticized China for its handling of its currency and said the Treasury could label it a manipulator. This is just nasty. We designated them not a manipulator recently. Now it's just out of spite, said Peter Boekler, chair investment strategist at Bleakley the advisory group. Strategists said if intervention becomes a serious idea in the administration, it is unlikely to work since it would not be effective if the U.S. acted alone. The risks of intervention are high, the risk of a positive result are low, it's not clear it could work, and the costs are high, and it's easy to block or offset. It could trigger something big, like somebody intervening on the other side, said Chandler. If the Chinese currency devalued by 6% last week, and Trump raised the tariffs another 6%, then the U.S. consumers would be back to where they were a week ago. So, I mean, the simple response to it in my book is to just raise the tariffs to counter the manipulation, and the consumers are back to where they were in the United States, and the U.S. has adjusted for the effects of the currency without having to risk whatever trouble directly manipulating this currency might be. So just raising the tariff seems like a better course of action than having to alter the currency. So I guess that's it for the video. If you like what you read, please like the video and subscribe to my channel, hit the notification bell, and give me your thoughts in the comments.